Short sellers who placed bets against Tesla stock were down a combined $12.2 billion last year, more than short sellers lost on any other company. At the same time, it seems like the government and mainstream media is trying to destroy Elon Musk. Short sellers have just lost. Well, you guessed it. We just played it. $12.2 billion in 2023. And where we sit right now, it looks like short sellers could lose a whole hell of a lot more than that in 2024. It all sounds very coincidental from an outsider's perspective. We're going to talk about this, and if there is a risk to Tesla's stock, what could be coming next for Tesla as well. On top of that, we will discuss what experts, quote unquote, are saying about our markets. In particular, I'm going to play a clip from JP Morgan's private bank. Big money. This is not you or me. This is JP Morgan's private investment bank. How they are underallocated to stocks. They're still in too much cash. That's what the director of managing this money just said. I think this is very good, very bullish for equity prices. Let's actually start off this video with a clip from Craig Irwin. You know this guy. He's one of the biggest bearish analysts on Tesla stock ever. He has an $85 price target right now on Tesla stock. Even he believes it's kind of suspicious how everyone wants to attack Elon now that he's seeing success.
It was a roller coaster 2023 for Tesla, from the price cuts to the launch of its much anticipated Cybertruck, but the stock still gained over 100%. A new report from the Wall Street Journal points to concerns with the company, executives from Tesla and SpaceX claiming uneasiness over Elon Musk's illegal drug use. With the EV giant gearing up to report fourth quarter earnings in the coming weeks, what are the biggest risks for investors? We've got the man, the myth, the legend himself, Craig Irwin, Roth MKM Senior Research Analyst. Great to see you here in person, Craig.
What an intro.
We had to give you the intro.
Yeah,
of course, all the bells and whistles, Craig. Look, at the end of the day, when you think about this most recent overhang, of course, there have been larger questions about Musk's conduct, both inside of and outside of the company. What does this latest kind of drudge of news really put in the throes for Tesla shareholders?
Let's be brutally honest here, right? Drugs are bad, right? Yes. And I'm well known for not being a fanboy, right? I'm not a fan of Elon Musk himself. I'm a huge fan of his success in EVs, right? I think this has been known to people in government for many years. I first had a conversation with someone in a relevant entity about this more than 5 years ago. And I think that there are several other people that could have been highlighted in that article. So it smells like a hit piece, right? Why now is the bigger question. It doesn't make a lot of sense to me, given that Tesla's really executing. They're doing a phenomenal job at SpaceX. And we can talk about real risks that don't have anything to do with Elon's recreational chemistry.
But is there, though?
So even one of your most bearish analysts on Tesla stock that currently has an $85 price target with a hold rating on Tesla says it's kind of suspicious that this is now coming out, that Elon is being targeted, just as Elon is starting to see a lot of success. That's exactly what FCC Brendan Barr has accused Biden of doing as well, as targeting Elon Musk. Now, this could potentially be a risk for Tesla stock and actually be one of the reasons why Tesla stock is going lower as well. We definitely want to watch this situation closely because it seems like someone is trying to destroy Elon Musk and likely take him out of a management role in Tesla, SpaceX, and some of the other companies. Do I think this plot, if you will be successful? Obviously not, but they're trying. This most likely just turns into a fantastic buying opportunity of Tesla stock, but we have to wait and see. It's also worth noting that Tesla is the majority shareholder of all of his companies. He owns 20% of Tesla stock outstanding, so you can't really get rid of him. It's not that easy. But again, this would not be the first time Elon is ousted if that were to happen theoretically. He was ousted from PayPal in the 90s, which ultimately turned out to be one of probably the greatest decisions someone made for the world ever. Without that, we probably wouldn't have EVs in the capacity we do, or potentially space travel. Let me know what you think down below in the comment section. Is someone attacking Elon Musk, and what is the purpose for this? I mean, after all, Elon, took the devil's lettuce years ago, and now it's being brought up. That in and of itself is kind of ridiculous. What's also strange is that short sellers lost more money betting against Tesla than any other company last year. This came out on January 6th. One day later, on January 7th, Tesla and SpaceX leaders concerned over Elon Musk's drug use, which was, again, years old. Something just is off about this situation. Maybe short sellers are, after all, terrified of 2024. I mean, I would be if I was short in Tesla. I would be absolutely terrified. I would probably be having nightmares. Because, hey, Tesla's margin should improve. The economy hopefully avoids a recession. The consumers' real wages just went positive. Rates are destined to come down in 2024. That should help consumers get into Teslas. A lot of people that bought Teslas, millions of Teslas, well, likely want to upgrade to something newer. This is back 2019, earlier 2020, even 2021. So yeah, I would be pretty scared as well. A hit piece like that would probably have the desired effect of pushing down Tesla's stock. I would personally say the glorious thing about this is it's very short term, it's very short-lived. Short sellers are ultimately going to suffer the same fate as they did in 2023 in 2024. Again, unless we go into a recession. To be a little bit more specific, short sellers who placed bets against Tesla stock were down a combined $12.2 billion last year, more than short sellers lost on any other company in 2023. More than Nvidia, that went from $100 currently at $500. The entire stock market, short sellers lost $194.8 billion in 2023. 12 billion of which is directly Tesla. So about 10% of the entire stock market's short bets that went wrong were on Tesla stock. That's on a massive scale. This says, but the losses by those shorting Tesla were particularly bad, more than the losses shorts suffered shorting Microsoft and Meta combined. I mean, let me tell you, if I was short Tesla, I would want a hit piece to come out as well. Just imagine what happens if Tesla stock does do what I think it will and reaches new all-time highs. Just imagine those losses. We're talking potentially firms going bankrupt. What if the loss is 40, 50, 60, 70 plus billion dollars in Tesla stock in 2024? That would probably be a good dose of karma, and I'm sure shorts at that point will learn their lesson. But maybe not. Now let's go ahead and somewhat transition into something else that could be very bullish for Tesla and the broader markets. This is JP Morgan's private investment bank. These are not investors like me or you. These are guys with millions, $10+ million typically. Typically you have to have about $10 million just to get into this pool of money, or be able to invest with JP Morgan's private bank. And what he says is, in particular, very bullish for Tesla stock. Now, as you know, things may not go as he is suggesting that they will. But the point that he's making, I think, is very valuable, and that is people are underallocated to markets. If there is no recession, stocks will do well. Specifically, small mid-cap stocks and interest rate sensitive names, in which Tesla fits the interest rate sensitivity perfectly, spot on. There's no other company that is more interest rate sensitive than Tesla. I mean, 90% of cars are financed, and Tesla also has solar products that are financed, and mega packs that are financed, power walls that are financed.
Market's recent weakness provide an opportunity for people to get more invested. Our next guest says most of his clients are still overweight cash and need to get back into the market. And he has some thoughts on exactly how to do so, both for stocks and bonds. For more, let's bring in Thomas Kennedy. He's the chief investment strategist at JP Morgan Private Bank. So your decisions, Tom, probably touch on what's going on with a lot of people's money these days. It's good to have you. Welcome.
Thanks for having me, Kelly.
And what would you say this boils down to? Trying to coax people out of cash still?
Our community, which is one of the biggest pools of wealth assets in the world, is still heavily overweight cash. So the rally that we saw in November and December has created a challenge for people to get reinvested. And we're calling it the everything rally. After the everything rally, what do? In November and December, you saw stocks and bonds outperform generally what you would have expected the S&P 500 to give you in an average year, Kelly. So it is a challenge to get people over the hurdle. But I think there's opportunities in stocks and in bonds to really get there.
What are the best ways to do so, you think, as you look around the universe?
Relative to what's in the price, at the broad level, high level, I think the market has priced in a soft landing almost perfectly. If you and I were sitting here, Kelly, say 6 months ago, what should the market price for Fed cuts in a soft landing? I think the average person would say roughly 200 basis points over a year and a half. That's what the market has right now. So I think for the bond market, the easiest thing to say is rate cuts are coming and that cash yield is going to go down. I can move out the curve just a little bit and maybe lock in a 5% yield. I think that's the easiest trade to make. But really, what we really need our clients to get to do is to get some more capital appreciation, be ready for the next bull market in equities. Yes, the S&P 500 is trading at PE multiples higher than historical averages, but small and mid-cap stocks trading relatively cheap, and that's where earnings growth should accelerate the most with a better economic backdrop for 2024.
Let me ask you one more about that, because that's a really interesting point. But I think a lot of people who are on the sidelines would think to themselves, okay, do I hold my nose and just kind of buy the S&P 500 even though it's gotten away from me because it's typically the outperformer? Or do I go for something where there's maybe a little bit more quote unquote value, but it might lag over time, which my sense is maybe that small and mid caps do, but maybe I'm wrong about that.
I think the historical backdrop, Kelly, important to recognize is small and mid cap stocks tend to be the most sensitive to growth. And in the last 12, maybe even 18 months, interest rates have been the dominant driver. And as interest rates have come down, you've seen tech shares really snap back quickly. Price to earnings multiples on small and mid cap stocks are cheap, 1, maybe 2 turns cheap, depending on what you're looking at. But as growth accelerates or gets repositioned for higher expected earnings next year, we should see small and mid caps outperform, at least tactically. The thing that's important for my clients is they're underweight this sector. And yes, I agree, getting beta is an easier opportunity set. But if we do get that firm soft landing, which we're expecting in our baseline, small mid cap should outperform better.
So yeah, what JP Morgan is telling their big money clients to do is get into markets, small mid cap stocks, probably your better place to be, as long as we avoid a recession. I think that was pretty valuable, and hopefully that information serves you well over time. Do you know what else will serve you well over time? Hitting that like button. Consider subscribing to the channel and or turning on the notification bell so you can be notified every time a video like this one is released. That is going to go ahead and conclude this video. Let me know what you think about all of this information down below in the comment section. If you guys want to come trade with us live in real time as well, every time we make trades, check out that link down below in the description of this video. So far, we're 1 for 1. We did hit a 300% winning trade on RXRX that, well, I cashed out at 300%. Some people are still holding it, and that thing's now worth 1,000% more than when we bought them. $10 contracts into $100 a piece. Yeah, off to a good start in 2024. We did put on some new trades today, so we'll see where things ultimately shake out for this week. Thank you for watching. My name is Michael Tyler. Make sure to follow us on X as well. You guys have a great rest of your day, and I will see you in the next one.